Yep.
I'm visiting India after almost 3 years. It feels like
First since COVID.
first since COVID.
Yeah.
Nothing changes, right? Traffic is still the same. The roads don't change ever.
True, true.
Half Bombay is still dug.
Near,
3 years
near,
ago and now also still dug.
near our office, there's some more infrastructure that have come up.
Yeah.
A road connecting Bandra east to west. There's a large shopping mall right next to the Maker Mac City. It's called the Geo World. So these are things that didn't exist when I was here.
Yes.
What's on your
That's
India
new.
trip agenda? What's on India trip agenda? Meeting clients, meeting companies?
Meeting clients. We had an internal event over the weekend, and a bit of meeting senior economists, policy experts as well. So it's a combination of all these.
So what are the feelers that you're getting from there? Because India has managed to really survive amidst this global sell-off that we've seen.
Absolutely. So there's, on one particular aspect, there's a clear clarity and sort of conformity of thoughts that India is at the cusp of a growth cycle re-emerging, which is possibly visible in the the kind of non-food credit growth that we are seeing in the range of 15 to 16%, which was hardly about 0 to 1% about 15 to 16 months ago. The banks have the cleanest balance sheets possibly in a decade. The corporates also, barring possibly a few groups, they have relatively deleveraged balance sheets. The average debt to equity ratio is about 0.5, which is obviously supportive of both a consumption and an investment cycle. Now having said that, we still have problems. The biggest is possibly that of a so-called K-shaped recovery, which economists talk about, which is keeping rural and second, third tier city consumption under check. And that's been one sort of common concern that we heard, particularly from the consumer staples companies. But if you look at the so-called affluent consumption, which, let's say, the four-wheeler companies or other high-end corporates they cater to, they seem to be doing fine. And indeed, that's one of the reasons why that's been one of the, sort of investment themes that we have been recommending to our clients.
But Manishi, do you put fresh money to work? Because all the themes that you've talked about, they were the first to recover from the COVID lows, and we all know the kind of rich valuations those pockets are currently sitting in.
Yes. In fact, valuations is, one of the common concern, it's kind of a common refrain that we heard from the domestic clients. And they are in a quandary because many of these investors, the domestic institutions, they're constantly getting flows. And huge quantum through the SIPs, for example.
And the mandate is to be fully invested.
Absolutely. I mean, they can't sit on cash for too long, and the mandate is to put in. So they are looking for reasonable valuations. That does exist in some pockets, but the concern is that are we not getting ourselves into a value trap? Fortunately, there are some sectors which are still trading at discount to their long-term historical averages. You have the commodity space, metals and mining space, and in particular now the expectation is that if China revives in some manner, maybe that space which had been languishing for a while would revive as well.
What would be, I mean, I know you track Reliance Industries, not just asking for a stock view, but just in terms of what your outlook has been on the recent news that we've seen take place with respect to their focus on financial services, how Jio has been performing as well. Any triggers?
You see, for these conglomerates in general, I mean, if you look at their 2 or 3 core businesses that they operate in, telecom, oil and gas, or retail, most of these have done well. But at the same time, the common concern about the conglomerates is that of unrelated diversification. And I think that concern still remains, which...
Putting your finger in too many pies, would it be?
Right, yeah. I mean, that's exactly, I mean, I didn't want to use that phrase, but yes, that is exactly the concern. Now, fortunately, some of these sectors have actually, the fundamentals have turned a lot better. Telecom, for example, is virtually a duopoly now. So there's a degree of pricing power that companies have. So I think, when looking at conglomerates, one has to be careful about that, that phenomenon of, a finger in too many pies. But at the same time, if the sectors, if the stars of the sectors that they are present in align, then you have a winner on your hands.
Manishi, the comeback in China, whether it is China opening up,
Right.
Hong Kong coming back in terms of in stock market orientation, what happens? What will be the impact of that on India?
Right.
And specifically, what will be the impact of that on emerging market flows? Because when I speak to some global money allocators and the LPs, the limited partners, they are of the view that, look, we don't want to put money in emerging market. There's only Brazil and India there. Now with China coming back, will flows come back to emerging markets?
Right. You see, over the last 7 to 10 days, two important events or developments have happened. First, we have China coming back, maybe just the beginning, but they will incrementally keep on reopening at least till the March NPC. That's the expectation. And second, we've also had an expectation of a Fed downshift in December. China, in US dollar terms, they actually moved in.
Actually, the